For the second day in a row, Congress taking on the collapse of FTX. This time, it was a Senate Banking Committee investigating what happened. The committee wanted to talk to FTX founder Sam Bankman-Fried, but he is still currently detained in the Bahamas, so clearly did not make an appearance today on Capitol Hill. But let's bring in former FDIC Chair Sheila Bair to discuss the latest on this. And Sheila, when you take into account everything that's played out over the last several weeks, we had the CFTC, the SEC, the DOJ, all filing charges against Sam Bankman-Fried this week. Just your takeaway just in terms of what has played out and the scale of this fraud, which is what these charges are alleging.
Right. Well, it does seem to be pretty massive. And I must say, I applaud Justice and SEC and CFTC for moving. I think a lot of people were thinking this was going to take months, and it was undermining public confidence in our enforcement processes, because it was pretty obvious. I mean, we still need all the investigations, but it's pretty obvious that a major fraud appeared to have occurred. So I'm glad they finally moved. I think, the enforcement actions are vigorous and powerful, but it's fit to scale in terms of what it looks like occurred at this company. So I applaud them, and I think it's important for others in the crypto space who may be playing around like this. We don't know. It's not an opaque market, but this sends a really, really strong signal, which is good.
Today we had a Senate hearing. Nice to see you, Sheila. Yesterday we had the House Financial Services Committee hearing, and John J. Ray, who's now cleaning this mess up at FTX, was very transparent about what went on, about the level or lack thereof of sophistication. Let's listen to what he had to say real quick.
Okay.
This is really old-fashioned embezzlement. This is just taking money from customers and using it for your own purpose. Not sophisticated at all.
So much of the discussion, as you know, Sheila, has shifted to regulation, whether it's by the CFTC or the SEC. But when it was old-fashioned embezzlement, in the words of the CEO, would regulation have stopped it?
Well, I think it would have. If they'd been forced to register as an SEC-regulated exchange, there would have been customer segregation rules around protecting customer assets, rules around not having affiliates, investment affiliates of an exchange, given the inside information you get running exchange in terms of order flows. So, I do think it would have helped. Now, he's right. It sounds like it's good old-fashioned fraud. Technology may be different, but, we've seen these kinds of scams before. And so, yes, I do think a more vigorous application of the securities regulatory regime on this institution, on this firm, would have helped prevent some of this stuff or nipped it in the bud earlier. But you're right. I mean, there's nothing new. And they do have, and I've been saying this for a long time, the SEC and CFTC already have the vast majority of authorities they need to crack down on this market. They just need to move ahead more vigorously. And I'm hoping now that this FTX debacle will provide the incentive for them to do so and the political support for them to do so.
Well, Sheila, then more specifically, I guess, what exactly do you think that regulation should look like if both the CFTC and SEC are playing a role in this? And then also just, does the SEC then bear some of this responsibility in terms of what played out if they should have acted sooner? And you're saying they potentially could have realized what was going on much sooner than where we are today.
Right. Well, I don't know. I don't want to second guess. I know they have brought enforcement cases for litigation around what is a security. So there have been efforts. I hope they double down now. But going forward, I think it's clear they have a mandate. And I think there might have been some political pressure, too. This guy was working the Hill. He was trying to play the SEC off the CFTC, take authority away from the SEC and give it to the CFTC over this market. So there were a lot of cross currents in terms of what was going on and the lack of a clear mandate for the SEC to move ahead. I think they've got it now. And as I said, hope they do so aggressively. And I would start with protection of customer assets, no affiliations, investment affiliations of the crypto exchanges. Wash trading, they were clearly inflating the value of their own their native coin with wash trades, or at least that's what it appears in the press reports. I mean, that's just basic stuff that is prevented in their prophylactic measures in a SEC regulatory regime with controls and supervision that help prevent that kind of thing from going on. So they've got the mandate now. If they didn't have it before, the SEC's got a lot of things on its plate. Just came out with a big batch of market rules. They've got climate. They've got a lot of things. So I feel their pain, but boy, this has got to be top priority. People are getting hurt in this market.
No question about that. I mentioned the Senate hearing today and an interesting back and forth between Senator Elizabeth Warren and Kevin O'Leary. Other people know him as Mr. Wonderful on Shark Tank. Warren is proposing the Digital Asset Anti-Money Laundering Act, targeting the crypto industry. Here is this interesting exchange.
Currencies have been used for drug trafficking since the 60s in the American dollar, when it was thrown out of a Piper aircraft in a duffel bag. The American dollar is also used by bad actors all the time.
Mr. O'Leary, I appreciate your point that everyone tries to engage in money laundering. That's what terrorists do. That's what drug dealers do. And that's what states like Iran and North Korea have done. The only point I'm trying to make is, should the same rules against money laundering apply to crypto in the way that they apply to banks, to stockbrokers, to credit card companies, to Western Union?
So Warren or Wonderful? Who's got it right here?
Well, Senator Warren's right. I mean, same risks, same rules. There's no reason in the world why crypto exchanges shouldn't have the same kind of controls that other financial institutions. We all want to fight illicit financing, terrorist financing. So she's right. I mean, I think a lot of crypto exchanges and firms, there's a good number that do already, not enough. But she's right. Yeah, there's no reason why there should be special rules for crypto exchanges. My gosh, community banks really spend a lot of money on AML, anti-money laundering, anti-terrorist financing requirements. It's costly for them. It's going to be costly for crypto exchanges, but they should be doing the same thing.
In terms of action from regulators, I also want to bring up this headline that we got today. Influencers were charged by the SEC for $100 million. The SEC charging those influencers for stock manipulation scheme promoted on Discord and on Twitter. So on social media, we know a number of celebrities have promoted FTX on social media, which has kind of gotten them in some hot water. A number of lawsuits have been filed because of that. But when it comes to social media regulation, and I guess what more needs to be done to protect the consumer, what do you think can be better done to protect the consumer? And do you think the regulation that's in place today is enough?
Well, I do. I think this is another case where, yes, and good for the SEC for bringing a very vigorous lawsuit against these so-called influencers. It's the same kind of fraud. The same, pump and dump's been around for a long time. The fact they're using social media now doesn't make it different. The SEC's got a lot of authority to go after pump and dump. They're doing it now. I think it'll send a strong signal. They may do more. Power to them if they do, but I don't think we need new rules just because the social media is being used for schemes that have been around for a long time.
Former FDIC.
And I do think that's a danger. Sorry.
No, go ahead.
I think that's a danger because, then regulators, well, should we wait for the legislation? No, you should just go ahead. You've got the authority to use it.
Indeed. Former FDIC Chair Sheila Bair, thanks so much for being here. Enjoy the children's book over your shoulder as well.
There you go. One's on Ponzi schemes.
Very nice. Shark scam over the right shoulder there. Very apropos.